Welcome back. You're still tuned into Trading Hour. There are a lot of earnings coming through, and Indian Bank is the next one we're looking at. On the back of its second quarter earnings, the bank's net interest margin improved on a year-on-year basis as well as on a sequential basis. The asset quality has also improved this time around. So to discuss the quarter gone by as well as the outlook going forward, we're joined by Shantilal Jain, who's MD and CEO of Indian Bank, on the show now. Mr. Jain, good morning and thanks a lot for joining us. This is Pavitra. You know, the first question I want to ask you, because this number is really popping, is the slippages, which have seen quite a decline versus last quarter. It's down around 20%. Your asset quality is also improved, like I was just pointing out. So can you take us through the guidance there? Is this a trend that we can, expect to see going forward as well?
Good morning. So you see our asset quality is getting better and better. So our gross and net NPA both have come down. And you see the last quarter, the slippage was around 2,300 crore, whereas the recovery was around 3,200 crores. And as a result, our gross and net NPA has come down, which from the 2.12% net NPA to 1.5%. And going forward, what we are seeing that our SMA 1 and 2 has come down significantly, again from 0.61 to 0.5. The collection efficiency is maintaining at 95%. So going forward, we see that our asset quality should improve from here also.
Okay, asset quality should improve. Mr. Jain, we were having a chat with UCO Bank a couple of hours ago, and the management told us that for the last many years, the big issue was corporate slippages. They had a very difficult time, and now there's a huge improvement there. They don't have any major corporate account under stress. Are you seeing an improvement as well in the corporate space, and can you give us some numbers?
Yeah, in corporate side, actually, the slippage was around 200 crore in the last quarter. That is only a one account. Otherwise, we are not seeing any stress in the corporate book. Maybe 10, 20 crore, but not beyond that in a corporate side. So going forward, the stress may be from the MSME book also, but it will not be a much. So going forward, we are seeing better asset quality.
Sir, your loan growth is slightly lower than the industry. It's in mid-single digit kind of rate. What is the guidance that you have on loan growth, and where is the growth coming from for you?
So our loan growth was 14% on a YOY basis. And basically in the RAM, we are growing 13%. And you see quarter on quarter, consistently bank is posting double-digit growth in a RAM sector. And today our RAM is around 62% of our book, and all segment of the RAM are growing, whether it is a SME loan or it is a agri loan or a retail loan. In a retail also, you see our housing is growing 11%, auto is growing 28%, gold loan 19%. Like in agri also, the gold loans, SHG loan is growing 45%. So all RAM segments are growing. In a corporate, the growth is less because we are margin conscious. Wherever we are getting better risk return reward, we are going on that. So in all, bank has grown 14%, and going forward, we also see that we also grow plus minus 2% of 12%.
Okay, got that. That is on the loan growth. You've grown around 14%, and we could see similar levels going forward as well. Mr. Jain, on the net interest margin, like I said, there's been an improvement on that as well. It's at 3.2%. Can you tell us what you expect on this? We have seen it, gradually go up. So should we expect that in the coming quarters as well?
Yeah, so your net interest margin was 2.91 in FY22. It was 3.10 in first quarter, and it is 3.20. In the second quarter. Average, we are at 3.15. Going forward, the interest rates are tightening. So interest rates on deposit is also increasing. And considering all this, we are hopeful that we will be able to maintain the net interest margin of around 3% or so.
Okay, net interest margin of 3%, right, is what you said?
Yeah.
Okay, all right. And you said this loan growth will be about 10 to 14%. Is that something that you're looking at by the end of this year? And what is the target for FY24? And can you just break it up for us between retail loan growth, corporate loan growth? Where do you see the maximum, and also SME?
Yeah, basically, we are growing 13% in the RAM. So that 13-14% will continue in the RAM. In a corporate side, based on the availability of margin, risk return reward to us, we will take a call. So if we are getting a better margin, we will grow 14%. If we are not getting, margin, then we will be credit substitute or other products. So that is why I have given a guidance of 10 to 14%. But RAM, we will continue to grow 12 to 14%.
So why are the margins lower on the corporate side?
In corporate sides, basically the availability of funds, and there are various sources of raising funds in corporate sides. So there always be a pressure on the interest rates, and we too are basically on triple B, A, and above rated accounts. So we are mainly concentrating on that.
Okay. You said asset quality will improve. Any guidance? Gross NPAs were at 7.3%, net NPAs were at 1.5%. What could these numbers come down to, say, in the next 2 quarters?
Our gross NPA should be around 7%, and net should be less than 1.5%.
Okay.
Okay, got that. The other big theme that we have been talking about is, of course, credit growth, how it's looked quite robust for the entire banking space, and it continues to pick up. Can you take us through your own outlook on that?
The credit growth is happening in the industry, and this is the best time from the bank's point of view where the credit growth is increasing. You are getting good margins. So that is why we too are focusing on the credit side, and basically we are more of a retail type of a bank where we are consistently getting margin, consistently growing.
Okay, all right. On that note, we'll let you go. Mr. Jain, thanks a lot for joining in. That's the MD and CEO of Indian Bank talking about a pickup in their business. Slippages are lower, retail growth has picked up, and a 10 to 14% range is what they're looking at in terms of loan growth. Let's take a short break. We'll get you more on the markets on the other side. Do keep it with CNBC TV 18.